Hey everyone, welcome back to the channel. Today we're diving into the best investments for the near future and beyond. Whether you're looking to grow your wealth quickly or secure your financial future, we've got you covered. Listen, I get it. Investing can seem super complicated and even a little intimidating, especially if you're just starting out. But trust me, it doesn't have to be that way. In fact, the earlier you start, the better off you'll be in the long run. Compounding is a powerful thing, and the sooner you put your money to work for you, the more time it has to grow, exponentially. That's why I'm breaking down the top investment strategies you should consider right now. We're talking about everything from real estate to the stock market and even diving into the exciting world of cryptocurrency. So, grab your notebooks, get ready to take some notes, and let's get started. Alright, before we dive into specific investments, let's talk about the golden rule of investing diversification. What does that even mean? Well, it's simple. Don't put all your eggs in one basket. Imagine investing all your money in a single stock, only to have that company go belly up. That's a recipe for disaster, right? Instead, you want to spread your investments across different asset classes. Think of it like building a strong financial foundation. You wouldn't build a house on just one pillar, would you? You'd want multiple pillars to distribute the weight and make sure it's stable. The same goes for your investment portfolio. By diversifying, you're essentially minimizing your risk. If one investment isn't performing well, others can pick up the slack. This way, you're not putting all your financial eggs in one basket, and you're protecting yourself from potential market volatility. Now, there are tons of different asset classes out there: stocks, bonds, real estate, gold, you name it. But a well-diversified portfolio typically includes a mix of these, tailored to your specific risk tolerance and financial goals. So, how do you actually diversify? One popular strategy is the 100 minus your age rule. This means you subtract your age from 100, and the resulting number represents the percentage of your portfolio that should be allocated to stocks, with the remaining portion going towards more conservative investments like bonds. Of course, this is just a general guideline, and your individual circumstances might call for a different approach. Remember, there's no one-size-fits-all solution when it comes to investing. That's why it's so important to do your research, understand the risks involved, and maybe even consult with a financial advisor to create a personalized investment plan. But the key takeaway here is diversification. It's the cornerstone of any successful investment strategy and will help you weather any market storms that come your way. Now let's dive into some specific investment opportunities, starting with one that's been on fire lately: technology stocks. We're talking about companies like Apple, Tesla, Amazon, Google, the giants that are shaping the future as we know it. Think about it. Technology is everywhere. From the smartphones in our pockets to the software we use every day, it's become an integral part of our lives. And this trend is only going to accelerate in the coming years. That's why investing in tech stocks can be so lucrative. These companies are at the forefront of innovation, constantly pushing the boundaries and creating new products and services that we can't live without. Just look at the performance of the tech-heavy NASDAQ index over the past decade. It's been on an absolute tear, consistently outperforming the broader market. And while past performance is never a guarantee of future results, it does show the incredible growth potential of the tech sector. But of course, there are risks involved. Tech stocks can be volatile, and their valuations can fluctuate wildly based on market sentiment and investor speculation. That's why it's crucial to do your due diligence before investing in any tech company. Look at their financials, their management team, their competitive landscape, and most importantly, their long-term growth prospects. Don't just jump on the bandwagon because everyone else is. Remember, investing is a marathon, not a sprint. Choose companies that you believe in, that have a solid track record, and that you think will continue to innovate and thrive in the years to come. And remember, diversification is key. Don't put all your money in just one or two tech stocks, no matter how promising they may seem. Spread your bets and create a well-rounded portfolio that can withstand market fluctuations. Chapter 3. Real Estate Building Wealth. Brick by brick. Now, let's shift gears and talk about a more traditional investment: real estate. This is something that I personally love, and for good reason. Real estate has been a proven wealth builder for centuries, and it offers a level of stability and security that you don't always get with other asset classes. Think about it. People will always need a place to live, right? That's why investing in rental properties can be such a smart move. You're essentially creating a passive income stream for yourself, where tenants pay down your mortgage while you build equity. Plus, real estate is a tangible asset. You can see it, touch it, and it's not going to disappear overnight like some speculative tech stock. But of course, real estate investing isn't without its challenges. It requires a significant upfront investment, and you need to be prepared to deal with tenants, property taxes, maintenance costs, and all the other joys of being a landlord. But if you're willing to put in the work, real estate can be an incredibly rewarding investment. And if you're not ready to become a landlord just yet, there are other ways to get involved in the real estate market. You can invest in real estate investment trusts or REITs, which are publicly traded companies that own and operate income-producing real estate properties. This allows you to gain exposure to the real estate market without having to deal with the hassle of owning and managing properties yourself. Another option is crowdfunding platforms, which allow you to pool your money with other investors to purchase real estate assets. This can be a great way to diversify your portfolio and invest in larger projects that you wouldn't be able to afford on your own. So whether you're looking for passive income, long-term appreciation, or a hedge against inflation, real estate is definitely an investment worth considering. Chapter 4. Cryptocurrency. Navigating the Digital Gold Rush. Okay, let's talk about the elephant in the room, the one everyone's been asking about: cryptocurrency. This is the wild west of the investment world, full of potential but also plenty of risks. We've all heard the stories of people getting rich overnight by investing in Bitcoin or Ethereum. And while it's true that some early adopters have made a killing, it's important to remember that past performance is not indicative of future results. Cryptocurrency is still a relatively new and untested asset class. Its value is driven by speculation, supply and demand, and a whole lot of hype. This makes it incredibly volatile, and its price can swing wildly in either direction. So, should you invest in cryptocurrency? Well, that depends on your risk tolerance and investment goals. If you're comfortable with the high volatility and potential for loss, then a small allocation to crypto could make sense as part of a diversified portfolio. But if you're looking for a safe and predictable investment, then crypto is probably not the right choice for you. It's important to remember that investing in cryptocurrency is like betting on the future of technology. No one knows for sure which cryptocurrencies will succeed and which will fail. Some experts believe that blockchain technology, which underpins cryptocurrencies, will revolutionize various industries from finance to supply chain management. Others are more skeptical, arguing that crypto is a bubble that's bound to burst. So, before you invest any money in cryptocurrency, do your research, understand the risks involved, and only invest what you can afford to lose. And remember, this is not financial advice. I'm just a guy on YouTube sharing my thoughts and opinions. It's always best to consult with a qualified financial advisor before making any investment decisions. Chapter 5. Index Funds and ETFs, the Power of Steady Growth. Now let's talk about an investment strategy that's a little less exciting than cryptocurrency, but arguably much more reliable. Index funds and ETFs. These are often seen as the boring option in the investment world. But trust me, boring can be beautiful when it comes to building long-term wealth. So, what exactly are index funds and ETFs? Well, they're basically baskets of stocks or bonds that track a particular market index like the S&P 500 or the Dow Jones Industrial Average. Instead of trying to pick individual stocks, which can be incredibly difficult and time-consuming, you're essentially buying a tiny piece of the entire market. This is a great way to diversify your portfolio and reduce your risk because you're not betting on the performance of any one company. Plus, index funds and ETFs are incredibly low cost. Traditional mutual funds often charge high fees that can eat into your returns, but index funds and ETFs have much lower expense ratios, which means more money in your pocket. Another great thing about index funds and ETFs is that they're very tax efficient. Because you're not buying and selling individual stocks as frequently, you're not triggering as many capital gains taxes. Now, index funds and ETFs might not make you rich overnight like some speculative investments, but they offer a proven path to steady, long-term growth. They're like the tortoise in the race, slowly but surely outpacing the hare. If you're just starting out with investing, or if you're looking for a hands-off approach to growing your wealth, then index funds and ETFs are definitely worth considering. They're a simple, low-cost, and effective way to invest in the market and participate in the long-term growth of the economy. Outro: start investing in your future today. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more investment tips and financial advice. Leave a comment below with your favorite investment strategy, and we'll see you in the next video. Remember, investing is a journey, not a destination. There's always something new to learn, and the market is constantly evolving. But by staying informed, diversifying your portfolio, and making smart investment decisions, you can set yourself up for a bright and prosperous future. So what are you waiting for? Start investing in your future today.